Uh, so most of the best support resistance lines, targets, places where the market might go, stop, go the other way, are either real time or relatively real time. It's fine to have levels and targets that you see from days before, and maybe areas that weren't tested that you think are good, but you always have to come in to qualifying anything before you do it. And I like the more real time it is, the more people that might naturally be stuck in real time, the better reaction, the better probability it creates. So as we started running up again, after a couple moves after this CPI number that had come out today, we rallied, we retraced, and then they tried to re-rally and pop this really nice. It's like, well, if you're long to get out of that long, if you're bearish looking to fade this particular pop, where is the spot to do it? Now you got to qualify it. Now, if you look at the top of the screen, you're going to see an area where a bunch of shorts on this is a 60-minute, what we call OPP, stands for other people's positions. When it's red like that, people had gotten short on the way down. And that's generally going to be a good target and a place where the market's going to stop. So what I had said is, guys, that as it comes into there, that's a place where it's going to target and probably stop, be some real-time, near-term resistance. Then what you see, if you just don't want to use price to cover a long, or you're looking for a little bit more qualification to open up a short, you wait for our OPP down here on a 2-minute to go from red, white to green, gray. And you get that right in here. Yeah, it's not, don't try to be at the very top. It's difficult to sell the top of a move, buy the bottom of the move. Once in a while, you can get those off, but you don't try to be perfect. Just get close. All right. And if you look at this market, when it goes green, gray, that means the sellers are starting to get anxious over here. That's where this line goes green. And there starts to become more longs than shorts over the last 2 minutes. That's this particular vertical line. And it's also represented in this green, what we call laser. So when sellers are getting more anxious and there becomes more longs than shorts, that's bearish. When shorts are becoming dominant and the white line indicates buyers are becoming more anxious, that's bullish. That's not helpful for price to go up or down. That's necessary for price to go up and down. Most people who trade stocks, crypto, futures, Forex, they don't understand the concept of what makes the price that they're predicting go up and down. They're predicting up or down, but they don't know at its most simplest form what actually is needed to make it go up or down, and then predict that. So don't use price to predict price. You're predicting price. What you're trying to do is what's needed, and how do you predict what's needed? If you could predict what's needed, then you stack probabilities so your predictions become probabilities and not guesses or good luck. And now you could create this ready, aim, fire approach where you're bullish or bearish for good reasons. You have good locations for good reasons. And then you pull the trigger and fire in the ready, aim, fire progression for good reasons, where people are getting the wrong way. More longs, more sellers, more sellers. Hey, that's helpful for price of anything to go down, isn't it? You're not thinking along those lines. You're not thinking along the lines that was taught to me in the early days of being on a trading floor in the mid 90s, when that was the only venue of professional day traders. Then I moved in 2000 to a real prop firm, which was the only venue of real-time day traders on a screen 22 years ago. And the point is, there aren't many real prop firms out there. And I'm not advocating people to go out and get hired by a real prop firm. And the firms that say they back you in this, that is not what a real prop firm was and is. When I got hired, if I didn't make money, they didn't make money. They had a true invested interest in the success of the trader, or they'd have to let them go because they were going to be costing them money. And they just backed them financially. They gave us a draw before we started making money. Now, we gave a considerable amount of money and percentage of our profits, especially for the first 3 years, but it's worth it because of the opportunity. The point I'm trying to make is this is the way in the environment that I was taught. And I didn't have to go down through many rabbit holes like many people have to do when they do internet searches. One of the things I say about the internet is it's awesome because of all the information at our fingertips, but it's terrible because of all the information at our fingertips. And like anything else, 80, 90% is bad and 10 or 20% is good. So the point is, the right and wrong way to trade has to do with the right and wrong way to predict where price is going, because that's what you're trading. What makes it go up or down, and then predict and find that. More buyers, less sellers, more sellers, less buyers.